Good afternoon, everybody. Before we start this afternoon's webinar, we'll just let the participant numbers rise. So please bear with us maybe for a minute as the numbers increase. I think it's probably worthwhile that we get going. I'm sure other people who've registered will start to appear as the session unfolds. Good afternoon to all of you who've joined today's webinar who are based in Sri Lanka, and good morning from the UK where I'm based. My name is Jonathan Barber. I'm the Head of Business Development for the Institute of Financial Accountants, and it's an absolute pleasure and a delight to welcome you to this afternoon's IFA Sri Lankan CPD branch meeting and webinar. I'm delighted to be joined by two speakers who will be introduced in a minute, but I'm delighted to be joined alongside the Institute's Regional Director and international representative for Sri Lanka, Mr. Abdul Jamaluddin Farsaf. It's a pleasure to work with Farsaf, and we look forward to supporting members, students and new members in the months to come as we develop our presence and our support to accounting professionals in Sri Lanka. Can I just, by way of introduction to non-members who've joined today, just introduce the Institute of Financial Accountants. The Institute are an internationally recognised professional accountancy membership body. We are full members of the International Federation of Accountants, IFAC, the global standard bearers and regulators for the accountancy profession worldwide. We support 37,000 members and students across the globe. And our key note of, if you like, differentiation is that we focus in upon supporting members and accounting students who work within either the finance function of an SME-sized enterprise, a small and medium enterprise, or our members own, run or work within a small or medium-sized accountancy practice who are providing accountancy, audit, taxation style services to a small and medium-sized client base. We look through webinars like this to provide relevant, valuable, insightful and topical CPD and updates to our members. So as I said at the very beginning, it's a pleasure, it's a delight to be co-hosting this afternoon's webinar. Farsaf, would you kindly introduce the two speakers and the topics that they're going to be talking around this afternoon before I then run through a couple of other slides and then we will hand over to Professor for the first talk.
Thank you, Mr. Jonathan. It is my pleasure to welcome our speakers, two speakers in these afternoon sessions. I welcome Professor Dr. Nagalingam Nagendra Kumar and other speaker, Mr. Harshan Prasad. I welcome you both again for accepting our invitations and being one of the speakers for today's session. Then, even though we have planned to have this CPD program physically during these last years, but due to these prevailing situations of the country and in the globe, that did not permitted us to do this program physically. That's why this program is being held online. But we are hoping in the future we can have this program in the physical so that we can interact each other and we can develop our networks, and that kind of physical activities will be more um, that physical program will be more effective. So we hope to do it in the future in a physical manner. Having said that, our speaker, Professor Dr. Nagalingam Nagendra Kumar, he is one of the leading scholar in Sri Lanka, and he has served as a head of the educations for Institute of Chartered Accountants of Sri Lanka, and he is now presently working with one of the leading institutions in Colombo as a head of as a dean for particular department of a leading university. And the Mr. Harshan, he is a treasurer, head of treasury department for a leading investment company in Sri Lanka, and he is handling the share market operations in Sri Lanka on behalf of his organization. So these two speakers will share us today with their knowledge with us, and I welcome Professor to start today's sessions, and he will be talking about human values and the importance why it should be included in the financial statement. So I welcome Professor to begin this program.
Thank you, Farsad.
Thank you.
Can I just, before the professor starts, can I just add, if there are any technical questions during today's session, please bear with us. We will look to sort those out as quickly as possible. For anybody who has a question, there is a Q&A box either at the top or the bottom of your Zoom screen. Please type your question in there. Farsad and myself at appropriate moments will interrupt the speakers and pose those questions, or please leave questions till the end, and again we will make sure that questions relating to each presentation or any questions you have for the Institute are dealt with. So again, thank you, Farsad, for that introduction. Professor, if I can hand over to you, if you're able to share your slides. I very much look forward to hearing what you've got to say, and thank you very much indeed for joining us again.
Thank you, Jonathan. Am I audible?
Yes.
Yeah, thank you. So, good evening, the members from Sri Lanka. So, thank you very much for giving me the opportunity to at least meet you virtually and share some insights on human value inclusion in financial statements. Before getting into this, I would like to say that all are on holiday, so all will be on holiday mood. So I will be taking you through very quickly, and I will a little save time. So then the Harshan also can save little time, and then you can have your holiday continue. Right? So this is simply our research on human value inclusion in financial statements. So we have already done the research, and this is some sort of corporate social responsibility of the academics of creating the social impact of our research. So when I was asked to do a speech I straight away said that I will be coming out with my own product. So then it was accepted, and now I am presenting the outcome of our research. So that will be very much important for you all. The reason is you all are in the field and the industry. You all are the people, those who are taking decisions in accounting and finance. So as far as this research is concerned, myself and Naduni Madhavika is my co-supervisor, and all others, Uma Shankar, Isuri, Tenura, and Ishani, they were our students. So this is how the group was organized. So if I get into the outline, I will introduce the human value recognition, and then the research study, and the need for the accounting standard. So now from the outline itself, you can understand that our research urges the professional accountants to come up with the accounting standard specifically designated to the human value inclusion in the financial statements. So if you take the human resource and the accounting, though the resource is very, very important for any organization. So we account all the resources. In our financial statement, we account all the resources. So under the non-current assets, everything will be there. But though all the organization praise that the human resource is our asset, the important asset, it is our capital, and like that there are several wordings. However, it has not been included in the financial statement. So in the non-current asset part, if you see, you will not be seeing that the human capital inclusion. It will not be there, right? So that is the issue that we faced, we encountered, and it is not our problem, it is the problem of the globe. Internationally, this problem is there. So not only Sri Lanka, but also all over the world, even developed countries, they are not reporting. But they call the human resources as very important assets. So with that note, if you take the human resource accounting, I have explained the human value, the monetarization of the human value, very, very, very important. Very, very important. So how we are going to take the human value into the financial statement, how we all are going to take the capacities and skills and everything into one monetary value where we can report. That is the issue that we are now facing, right? So when we take the human resources, the all sorts of payment to the human resources are accounted as expenses in the financials. So that may be wages, that may be salary, that may be whatever may be the form of the payment, that remuneration is taken as the expense. So that part is there. That part is there, right? So as far as the human resource accounting is concerned, yes, the literature, the world has recognized that we have to go for the human resource account. We have to go for the human resource account. And again, they have defined the human resource account, right? In the definition, they say it is the identifying the human related data and measure and communicate. So they have defined. To that extent, they have recognized the human resource. So even when you get into the literature, there are several methods of valuing the human resources. So the developments are taking place, but the issue again and again, I'm telling you that we are not including the human resource value, human value in the financial state, right? So if you take the human value recognition developments in the world. So that started during 1960s. So the 1960s, the people were talking about the human value. That was the period when the phrase or the wording of human value came into existence. So most of the organizations, they realized that we have to identify the human value. So like that, in 1967 to 70, a little, again, a little interest. Like that, the period to period, the interest came and vanished, came and vanished. That like that it went. And finally, during 1990s, so human resource accounting gave a little further improvement, and most of the time all the people, they considered it is useful managerial tool, right? Human resource accounting is a useful managerial tool. So at least they recognize that one, that part is there, they recognize. However, still the 1990s started, still is going on. During 2021 also, we do not have any sorts of mechanism where the human resource or the human value is valued and taken into the financial state, So whatever the assets in accounting, we say that whatever the asset controllable by the entity, and where we are having sufficient probability of measuring the value of that particular asset, we can consider that as the asset. So here also the same, where you are employing the employee. So more or less, you are controlling that particular asset during the employment. And again, the literature has proved the probability exists that you can very faithfully value the human value. So the both elements are there. So what is the background where we are not taking account the human values into the financial state? I cannot understand. So if we take the current status of human resource accounting, so our aim is to develop a framework. So where we can have the human value and where we can have it in the financial statement. But up to now, this type of thing has not been happened or even addressed, right? So again and again I'm telling that though we are telling that it is a significant asset, we have neglected it. So during the pandemic these days, we understand the value of the human resource. So you may be having what sorts of other resources you may be having, but the V factor, that is the human resource, everything is out. Everything is out. So we face all sorts of difficulties. If you take the logistic and supply chain management side, so without the human interaction, everything went off. So if you take any sort of industry, without the human interaction, everything is out. So the human interaction, the human involvement, human engagement is much important if you want to have the results. So current status, though we are the very what I can say, very well we have understood that without the human resource, the organization cannot survive. organizations cannot meet, or organization cannot go for the results. Go for the result. They will die. They will die. It is proven now. It is proven with the pandemic. It is proven. So the present status to this type of valued asset, even an accounting standard is not there. Even an accounting standard is not there. They are neglected. But there are PPE, property, plant and equipment. But property, plant and equipment will not be having any worth if the human resource is not there. It is proven now with the pandemic. So based on those argument, I can further argue, but time is very limited. So in the limited the up to now, what I have explained, right? With the gap, with the problem, we formulated the research topic as methods of human value inclusion in the financial statement and recognition, and going for a accounting standard. So our research area is address the global issue of unavailability. Unavailability, not recognition of human value in the accounting standard, and again in the financial statements, and again in the financial statement. Okay, so our main objective was to develop an accounting standard which recognizes the human value in the financial statements by selecting appropriate reporting methods. Sub-objectives, based on the main objectives we formulated to determine the appropriate financial reporting methods of human value inclusion, and to develop an accounting standard which recognizes the human value inclusion in the financial statement. Right? So to the investigative objectives. So our aim is to give some sort of solution to this issue, right? So if we take the human value quantification method, so if we want to bring the human value to the financial statement, first of all, we have to value it, quantify. So for the quantification, we can go for the cost approach or the value approach. The literature supports these two approaches, right? So in these two approaches, right, the literature, when you get into the literature, right, the present value of the discounted future earning method and the historical cost method, the definition is there. I don't want to explain anything to the accountants as far as the present value and the historical cost methods are concerned. So you are very much thorough with that. So the literature also supports these two methods, right? And further, the literature come out with many methods. That is Stockholm's reward valuation model, right? And model for human resource accounting prescribed by Tiwari, and Hermanson's goodwill model. So he is studying based on the goodwill model, and Sarma's model. Sarma also has introduced a model, right? And and Moore's model, Moore's benefit model, and Hermanson's adjusted discounted future wages model. So adjusted discounted cash flow method, right? And Perkin-Organ's benefit model, and again Chakraborty's payment model. So The employees are made payments, so based on the payment, they try to value. And again, Flamhal's model, right? And again, replacement cost model. Even in our framework for accounting, under that also we are having some model, historical cost, replacement, and present value. Like that it goes. They have given the principle-based methods. But here they are coming out with the very specific models, right? And opportunity cost model and standard cost and the competitive bidding model. That is like IPL and Sri Lanka Premier League, how they buy the players. So here also the competitive bidding model. So how you are going to buy the employees, right? And contract labor method and capitalization method, exist cost method, right? Like that, there are many literatures. There are many literatures. So all the literatures, they come up with how to value the human resource. So now our issue is little solved in our research. That is, there are ways of valuing the human resource. There are ways. There are many ways. There are many ways. But we encountered the issue of what are the best method of valuing the human resource. So when we go through very deeply, so it took nearly 1 year. So very deeply, the literature review, we found out the historical cost and the present value method will give us the most valuable output in our research. So we selected the 2 methods for our study, right? So if you take the current status of the accounting standard for our overall human value inclusion. So in the accounting standards, most of the time standards deals with some areas of human value, that is not directly, but say for an example, the intangible assets and all these things. So in that direction, little the pitching is there, but there is no very straight away how we can do the human value accounting, human resource accounting, right? So we do not have any scope under the current accounting standard for the human value, So the development and the growth in the IFRS trigger for the importance of considering the human resource as an asset of an organization. The reason is, why I say is, the other accounting standard little have some pitching or backing, right? So based on that, right, the appearance of the human resource can be noted in 3 accounting standards. We straight away found that a little connection is there, but we cannot 100% say that it is for human value. So some are for intangible, some are for non-current asset held for sale and discontinued operation, employee benefits, and share-based payment, like that it goes, but it is not directly related to the human value recognition, right? So the practical application of this standard cannot be very straight away taken into for the human value accounting. So most of the scholars have identified that the HR can be reported as an intangible asset, as I said earlier, right? So, and they say that it satisfies the IAS 38, but it is not the 100% scope for human value inclusion. It is impractical under the IAS 38, taking the whole human value inclusion in the financial statement is impractical. So if you take the practical world, the practical world, we cannot say that no one company is recognizing the human value. So how we can do it? Like that, we cannot argue. The reason is, even without the accounting standard, some countries are recognizing the human value in their financial statements. The India and Nigeria, they are the very leading countries uh, which take the human value very seriously, and they report the human value. Say for an example, the Infosys, India. So here is the example, how nicely they report the human value. You can see now, right? So when the human value is reported, even they are coming out with the annual changes. The annual changes also positive, you see. So our performance, our fare, our asset base is getting plus increase, positive increase. So it is good side of the human value inclusion in the financial state. So even without having the accounting standard, following their own method, by developing their own method, so they identify the human value in the financial state. So here you see, they are having their own method, employee using lieu and skirts model. So they are coming up with their own model, and they are reporting the human resource. So we are talking about the environment and sustainable accounting, sustainable development, and everything. And why don't we think about to have an accounting standard for the human resource? So based on this, so we do not have the human value in the financial statement. So accounting standard is not there. However, some countries, some organizations are recognizing the human value. Though there are some standards which are having a little pitch on or little back on the valuation, it is totally not having a full scope of the human value inclusion in the financial statement. We develop the conceptual framework. So now we have to prove, if we want to show anyone that the human value inclusion is much important to the world, we have to prove that when the human value is included in the financial statements, the performance, the financial performance of the particular organization improves. If we prove that, that is the stepping stone where we can argue that we have to introduce the human value to the financial state. So that was our mindset. So we developed the conceptual framework. So you can see, so non-capitalized human resource values and capitalized human resource values. So which leads to firm financial performance. So if this analysis, the left-hand side analysis leads to the right-hand side, some sort of improvement, then we believe that the research will recommend for the human value inclusion, and again recommend the accounting standard. And the researchers can draft the accounting standard, a draft standard. So with this concept in mind, we developed the hypothesis, two hypotheses. So first one is there is no any significant impact on human resource value on the firm's performance using historical cost method. Second one, the same using the present value method. So now next, our thing is that we started to collect the data. We started to collect the data, but we never thought that we will be encountering such a huge problem in collecting the data. So then the pandemic, we faced the issue of confidentiality. So all the companies, they are having their policy of information. So as far as the HR salaries are concerned, they are having very confidential. So those informations are very confidential. So the collecting the data became very, very very, what I can say, very difficult, very difficult, right? So, and then we really, I would say, give me a second. Yeah. So in our methodology, yeah. So in our methodology, so we developed two hypotheses, and in collecting the data, we were very much facing difficulties. The very main reason is the confidentiality. So no one company was willing to give us the data. And again, unfortunately, when we started the research during 2020 January, during February, we encountered the pandemic, again, the issue. So we cannot enter into the company. And again, though we reached the company, having the data for the analysis, based on the confidentiality, it was not given. So however, we manage ourselves. We manage ourselves, right? We manage ourselves, and finally, we got one company. They agreed. They wanted this to happen. We explained very well what we are going to do, what is the practical outcome that we are going to have, what is going to be the social impact from Sri Lanka. This is a global issue. So we explained very well. Then finally, one company agreed, yes, we will give you the fullest support. And then only we got the confidence, and we had a case. So we then converted the study under a case study. So based on the case study, now these all are the history what I explained now. So finally, we use all these statistical package for analyzing our data. So we were trying for top companies, and then they were not. Then the most number of human resource availability in a company, that also didn't work based on the confidentiality. But finally, only the good negotiation, the good intention worked, and finally one company helped us. So that was the data that we had. And again, you have to understand our analysis is paired test. So you can understand in our conceptualization, before inclusion of human value, after inclusion of the human value. So you can understand our Sri Lankan companies, they never include the human value in the financial statement. So the first part is over now. It's very easy. So first part is without human value. As it is, we can analyze the financial performance. And second one is the very difficult part, complicated part. So we have to convert the financial statement after inclusion of the human value. Then we have the financial statement under the human value concept. Right? So based on that, we did the pair test under each method. As I said, our method, we identified through the literature review, the most good methods are the historical cost and the present value. So the analysis also we did under historical cost and the present value. But as far as the historical cost is concerned, so over the years, the companies has understated by 14 million, right? Without including the human value. That was our finding. And companies' net income also understated, right? by 3.8, and changes in the net income also reflected in the retained earnings through the adjustments in the total equity balance. So without including the human value, so some figures are understated. So you can see, sorry, you can see the pair test analysis. So our financial performance factors are the ROA, ROE, and gearing and EPS. So you can now see the before the human value inclusion and after human value inclusion. In the historical cost method, human value inclusion does not give a big change, a big through, but still it does not take you down. You can see the figures. You can see the figures up and down. It has no any big ups, but again, it has not taken you down. So based on that, in the descriptive analysis also, but I explained earlier, is available now. So all the variables are working very even not moderately. They do not have any impact on the historical cost method. No impact. So it does not take up or down. So no impact. No impact. So we understood that. And finally we decided that the historical cost method we should not consider for the human value inclusion, though we have decided based on the literature review that the historical cost method also a good concept. Then if you take the hypothesis testing also and the historical cost concept, as I said, so we are not considering. The reason is based on the 5% interval level. So it has no impact other than this. For the gearing, we are having good impact. You see, significant. So gearing improves. Why? The human value is now taken into account. So it has come in now. So gearing improves, right? But overall, we do not recommend the historical cost method as the method to be taken to value the human value to be included in the financial statement, right? So that is our hypothesis testing results. Then if you take the present value, so I have said we are not recommending that one. It has no impact. So now we took the next method, the present value method. So under the present value method, so over the years, we see the good worth. Over the years, we see good worth in the company, right? So with that, we had the two-pair test, right, before and after. So present value method, it is very complicated with the value to value the human value. So however we did it. So that was I said the confidentiality. The company did not give us the information. So based on that very confidential information, we convert, right? So after converting, now you can see the ROA, ROE, gearing and EPS after inclusion, how it is improved. You can see there is a huge improvement. There's a huge improvement in the financial performance, right? In each and every year, right? So if you take the descriptive statistics also, right? The ratio also result almost indicates all the factors were significantly affected. Early in the historical cost, the same analysis we did, but it is not significantly affected. But here, all the factors were significantly affected. And mean value of the ROA and ROE in percentage before capitalization 7, and after capitalization it is 9. ROE before it is 90, after it is 20. So, and again the now we in the human value inclusion under the present value method, we do some sort of reversal of salary, and then we identify the human value. So human resource asset will be there, and the human resource reserve will be there. So due to the reversal, right? So the mean value of the EPS has been drastically increased from 105 to 142. You see how it improves, and company's gearing ratio also has a good improvement. So in the hypothesis testing, in the paired test, so more or less all the factors are significant. All the factors are significant. And again, they are in line with our objective also. So in the hypothesis testing, so contrast to the earlier one, due to the unchanged income tax rate during the said period, right? The period has a high amount of income tax changes compared to other years, that in fact it impacted the ROE by having a little or a negative percentage changes. So concept of human value capitalization does not give any implication to tax authorities. Therefore, it leads to reflect the unusual variances in the profit after tax amount. By comparing each pair of ratios, it has been concluded that with accepting alternative hypothesis, because the adoption of the present value would be very much suitable to our companies. So better incorporate. The present value method. So here our pair testing is over. After the pair testing, we are very confident the present value method would be much important and much fitting to our purpose. So after that, we were thinking of going for a draft accounting standard. So we thought of having some sort of qualitative analysis also if we want to go for the draft accounting standard. So we did little qualitative studies about the related concepts in accounting, and even we went through all the accounting standards, the content analysis we did, and even the conceptual framework of accounting also we got into, and there also we did and qualitative analysis. And the qualitative analysis, our purpose was to identify again whether the cost method or the present value method the supporting the human value inclusion. So that was the analysis. These are the things, the output that we got, right? So most of the concepts, they supports the present value. So general conclusion of our research, though the statistical through the statistical significance between the observed group, as I said, the present value method reveals the most suitable reporting method. So interpretation with the most of the existing accounting concepts, such as all these concepts, matching, consistency, and conservatism, even the prudence, I can remember, right? They are giving more support to the present value, and present value considers the time value of money, and it identifies the real value of employees until they are retired. So present value The concept, it values the employee until the last day of the retirement. That is the beauty. Until the last day of retirement, the present value the human value as an asset. And then after valuing, you amortize, right? That is the rule. So it is evident that the present value method is most appropriate method. So recognizing the human value in the financial statement based on the outputs derived from the quantitative analysis is recommended. So we urge as researchers, we do not have any authority over account. We do not have. So there are people, those who are having the authority. Since I was the head of the accounting, head of the education and training in Institute of Chartered Accountants, I know as far as Sri Lanka is concerned, who is responsible and having the authority, and for the world, who is having the authority. So they are the people, those who can do some changes. But you all are the members, I know. So even the Sri Lankan accounting bodies, maybe CMA, CA, or whoever may be, all are the members to the IFA. So again, all the members, you can get together and you can do something good to the human resource, those who are working in organization. Even you all are human resource, though you all are accountant, you all are also a human resource. So you also to be taken into the human value inclusion, and you all should be there in the financial statement as values, not that as number count. So a number of accountants, 38 accountants in our company, or 500 employees are there. No, that is not the way the employees should be treated. There should be a value. This is the value of accountant. This is the value of the production operators. This is the value of engineers. So give the value. This is the engineer. Engineer 500 billion. Accountants 500 billion. Tell that rather than telling accountants 30, engineers 50. Don't do that. So our request, there are no universally accepted reporting method. So professional accountants, it is your duty. It is your duty to fill the gap. So we only can do the recommendation to the IFA to come out with the accounting standard. And again, I promise, now Jonathan is back again. So if I am asked to do the same presentations to some other countries where I can plead the other countries' accountant also to support this endeavor, and I will freely come and do the seminar. Thank you very much for listening.
Professor, thank you very much indeed. It's an extremely interesting topic that you've obviously undertaken some considerable research in and around. As I said to you earlier on this week, I'd be delighted to take you up on your offer for this talk to be given to.
Jonathan, I cannot hear you a little. Your voice is not.
Oh, okay. Sorry, I'll start again. Hopefully you can hear me. No, I was just saying thank you for the talk. I think this is an extremely important topic, and I will take you up, and you and I will talk further about when and how we can deliver the talk to other countries. From my side, just out of interest, you've undertaken the research. You mentioned there in your last slide, or the slide on screen, that there's no universally accepted reporting methods. Within Sri Lanka at the moment, what has been the feedback and the potential uptake you've received for maybe incorporating some form of inclusion and reporting of human value within financial statements?
I cannot hear Jonathan very clearly.
Let me try again. Can you hear me now, sir?
Little okay. Your
Okay.
voice is very low tone.
Okay, I'll talk a little louder, and hopefully that helps. The question, let me be I'll be concise this time. What feedback or what uptake have you had in Sri Lanka for your research and the potential inclusion of human value reporting within financial statements?
Yeah, this is a good question. That during my presentation also I said that even for the data collection we encountered difficulties. So to that extent, the human value inclusion is not happening in Sri Lanka. So even that all will accept my my what I can say, my argument. So still we have not get into this uh, human value inclusion in the financial statement. We have not.
Yeah. Okay. And do you feel, the whole point of having human value included within financial statements, is your opinion that it's important because it also links to ethical reporting and the whole subject of proper corporate governance?
Yeah, of course, yes. Of course, yes.
Yeah.
So that is also a important part. So that part I have not researched that yet, but as far as the financial performance side, yes, I have researched. So it gives improvement. The financial performance improves once you include the human value to the financial statement.
Yeah, that's I understood. And just out of interest, I mentioned that the Institute of Financial Accountants are full members of IFAC at the beginning. Have you delivered or have you shared your research findings with IFAC and appropriate committees within
Jonathan,
IFAC?
yeah, your question is very important question. So we finished the research just now, that is 20th December 2020. So this is the first time that I am delivering you. It's a very good opportunity. So I will be with you, and I'm going. My willingness is that if I can travel with you and take this to the some other countries and the IFAC, I will come and present.
Yeah. Okay. All right. Lovely. As I said, you and I can maintain contact. Moving forward. Obviously, I've asked a small number of questions. I don't know whether any of our participants have any specific questions for the professor. As I said earlier on, please do use the Q&A button if you do have. I know there's a particular question on there, but it's not related to the presentation, the talk that we've just heard. So I'm going to suggest that we leave those questions until the very end of the session. If there aren't any more questions, can I thank the professor for his insight and for his time again. It's a really interesting and I think valuable topic that he and colleagues have researched, and it doesn't matter whether it's Sri Lanka or any other country around the world. I think the inclusion of human value does need to be shown and seen within financial statements. So look, thank you, Professor, for your time. Thank you for your talk.
Thank you very much. Thank you very much for giving me the opportunity.
No, we're very grateful.
So I will be with you until Harshan complete his presentation. So I can also listen to this.
No, it's good to know. Farsath, do you want to sort of kindly move us on from the professor to Harshan and look forward to the second presentation and talk this afternoon?
Thank you, Mr. Jonathan, and thank you, Professor, for your valuable time. And I know personally that you are so busy, and you have allocated your busy schedule for us and for our members in Sri Lanka. So let me thank on behalf of the Institute of Financial Accountants UK. Thank you very much for joining us today. And I may invite Mr. Harshan Prashad. So he is a head of treasurer for one of the leading financial institutions in Sri Lanka, and he is the person in charge for trading with the Colombo Stock Exchange. So he has a broad knowledge about how the investment has to be happen in Sri Lanka. So I do request Mr. Harshan to start his presentation. Excuse me, Mr. Harshan, we couldn't hear you. Mr. Harshan, still we couldn't hear you.
Farshad, can you hear me?
Yes, please. Now you're
sorry for the interruption.
no
First of
problem.
all, Professor's presentation was superb, bringing the human capital into the financial statement. Actually, I remembered my MD, CEO in my organization always tells the biggest asset in the company is your human resource. We trust on you all, not in your assets, our assets, not our money, not our fixed assets. We trust on you all. So it is a marvelous presentation, bringing the human capital to the financial statement. Okay, so shall we start our area? Wealth created by the right investment, not only earnings. So here, why I say is this presentation, what I'm coming to say is everybody is earning well, but we also have a plan to invest. We should have a plan to invest also in the financial markets first of all. So I am let me introduce myself first of all. I'm Harshan. I'm also a chartered accountant. I'm working at Citizen Development Business Finance at the Treasury Department. So I am handling the equity and the fixed income portfolios. So I'll give you some insight of how the corporates work, how the corporate world works on the markets, right? So it will be interesting. So any questions, definitely you can raise your hand or just unmute your speakers, unmute your mics and speak to me. Right, just a small overview of the financial markets in the planet. So equity markets are just, don't underestimate, it's 191 billion US dollars in the planet. The biggest one is the Forex market. That means, I will make it very simple, the exchange rate of the currency is 5.3 trillion US dollars. The second largest market will be the gold market. So commodity markets, 2.6 trillion rupees. So what about, you may ask me, what about our market? Colombo Stock Exchange almost valued at 3 trillion. So last week it was going like a rapid rocket, the market index. So we are somewhere in 3.5 trillion rupees currently, our markets. Right, why should we invest? Why should we not invest? Answer is this. So we'll see the US S&P 500 index. Okay, so S&P 500 index, if you see from the financial crisis, 2008, when the markets recovered over a decade, the market was keep on going up, right? So it has ups and down. End of the day, the people who have invested were winners, because when the good news comes in the market, new president appoints and new stories comes into the market, obviously the market goes up. Yeah. So if you ask from me, last 10 years, the compounding growth rate of the US S&P 500 stocks are, you can't believe it even, 17% per annum. So it's a huge return. Actually, the Fed reserve LIBOR rates are almost now negatives. Okay, 1% or 0.1 like that. So if you see the market's returns, 17% per annum. So it's a huge return in the index. You don't want to put the money to the stocks. You can put to the index and earn money. So everybody will be liking to ask me the question, what happened to the COVID? See the market, actually from market collapse during the first COVID quarantine area, it dropped until 2200 index. So there was a 35% decline. So we'll not only think about the bad things, we'll think about the good things. As soon the market turned back, okay, so it has created a 67% return. So currently, even the second COVID wave in USA, it has a minor impact. Obviously, nowadays we are not caring much about this virus because people have got familiar. So this is a developed market. I took as USA as a developed market. Let's go to a emerging market. This is the Indian market over the last decade. Even that has outperformed. Don't underestimate it. CAGR of 10%. So this is BSE Sensex Indian market. So Indian market also parallelly has from 20,000, now it's 47,753. So what they are coming to say is, anyway, if you don't like to invest in the stocks, invest in the index, you'll be winning the match, right? So in India, if I'm not wrong, the interest rates will be much more lower than Sri Lanka. Now it will be about 2% or 3% FDs. So I'm not demotivating, but the markets, why should we invest money? I'm just coming to you all, right? So you can see the reason. So we'll come to this part. So we had a COVID first wave from 41,000, the index drop, Indian index drop for 27,000. So it's 32%. So we might be telling people were crying in India that market has crashed, all over the stories. When the market recovered, it went to 77% return. Even the second wave, there was no impact to the market. It was keep on going up. So I can remember last week, the India celebrated, it has reached to all-time highest 50,000, the BSE Sensex. So they have done the biggest reach in the stock market, 50,000, the index. Right, shall we come to our one? Right, so I just wanted to show our one in a detailed manner. So what happened to our last year and how the market reacted. So I will take us time and just explain how market has all sort of, it doesn't just ups and downs it goes, it has a reason to happen something, okay? So I can remember as soon the year January started, the Iran attack, US attacks the Iran, okay? So that news came to the market suddenly starts to collapse. Even the Fed announced a 50 basis points rate cut. Even the Central Bank of Sri Lanka told the rate cut 25 basis point because of the COVID pandemic. The market still collapsed down. So we can say the first quarter, under the first wave, the Sri Lankan market hit by 29% down. So it was a terrible time where we closed our market for almost from April to May. Sri Lankan markets were closed because people were panicked. But we had a good time. This time, the Central Bank of Sri Lanka had rate cuts on the interest, 25 basis points and 50 basis points. So they were keep on reducing the interest rate of the country, right? Even the Fed reduced the country. But I just wanted, again, somewhere in June, market recovered and the government has pumped good news. That means they reduced the interest rate. They did a swap on the hedging part, and the elections always plays a vital role. If you go to the US stocks, okay, US market, I'll take it back. See, President Obama selected second time, the markets again turned back. Even the Trump elected the first time, the markets were positive. So when a good news comes to the market, yeah, bad news comes also, markets collapse. I agree with you all. When a good news comes, so the current party won the 3/4 of the majority. That gives the confidence the market that the government and the country will go in a correct direction. So we had a bad news. Yes, Mondi degraded our rating, credit rating of the country from B2 to triple A1. But market has not taken the acceptance of that because new government got the majority of the parliament seats. The market was very positive. Right, second wave in October, what happened? The market didn't, even it has not taken such much impact, 8%, and again it recovered, and market is keep on going. Actually, now it's almost 8,900, the all times highest the market. So what I'm coming to say is, After the COVID, we'll see first quarter, second quarter, even the COVID impact was 29% down the market. Second quarter, it gave a return of 21%. Third quarter, it gave a return of 16%. Fourth quarter, it gave a return of 13%. That means December. If you take the cumulative, it's almost 80% return now by down, because the market people who have put the index money, definitely they have got a adequate return. So don't think markets are bad, right? So only thing is, always everybody criticize this question, ask for me this question, very fun, very famous question. Even you might have a doubt. Okay, now COVID pandemic is there. Okay, things are going very bad. Why market is going in a steady momentum upwards? Okay, the answer is economy is down yet, then the market is upwards. Why? If you ask from me, market is always up forward driven. That means market always thinks, now we have faced the COVID, next thing is the good news, we are going to come normal. Before the COVID comes to Sri Lanka, even the market collapsed. Now we are ready, now things are getting normal, so we will recover. So if you take this one, if you see the business cycle, the green color one, the cycle is this way, and the red one is the market's reaction. So even the cycle comes down, just before it starts, the market starts going up. So you can't wait till the economy comes up, then you go and invest. You will invest in the peak stage. Pointless, right? The next thing is, you will be criticizing the market. Economy is a boom stage, market is declining, but market always forward driven. They know next stage is the decline of the economy. So now even the market will collapse. So this is an inside picture how the stock markets all over the planet it works. It's a forward driven element. So always my friends ask me, so what is the business? What are the business now going to do well? Actually, market will give us a good answer, because quickly, about 6 months or 3 months before, even the sectors which are rising up in the market, that shows that definitely these sectors will do in 6 months, these businesses well. Okay, so why investment is important? Right now will come our personal. Okay, why a company invests? So our company invests on all the stock markets, bonds. First of all, sustainable income for us. We'll think about individual like you and me. Okay, sustainable income. So it is recession proof. So you have a sustainable investment, even a fixed deposit, you will be keep on getting money. Secured assets, future secured asset-backed life. So you will think that whatever happens, crisis or recession, I have my assets backed up. Okay, what assets is depend on you. Okay, so crisis times better to put money into the gold rather than the stock markets. So you should have your options and you have your assets back, so you are taking a wise decision. Opportunity to expand in your life. Yes, you can grow your investments, right? Finally, where we end up, you and me are working. Okay, we must have a saving for our future. Yes, we have our EPF funds, ETF funds, gratuity funds of the company, but it's time to have our own funds. You will ask me, we have our own insurance company fund management. Okay, those gives you return between 8%, 4% return. But these will give you a CAGR of, I showed you the proof, in Sri Lanka, CAGR will be about 25%. So nobody will be losers in the market. Right, investment options. So always don't think we are in Sri Lanka. We have only the front both options. That means the stock market of Sri Lanka and the fixed income. Don't think only those things. Even we can do the forex market, commodity market. So commodity market will be gold, crude oil, copper, silver. So famous in Sri Lanka, if you take the Sri Lankan context, we have a stock market, our own stock market, and the fixed income. So let me first of all think about the stock market, then come to the fixed income. So I will just give a reminder for you all, saying that actually I can't present everything within this 1 hour. I told to the presenters also, management also, but I will give you an inside picture. If you are very interested, definitely you can approach Mr. Farshad. I will do a presentation in each area in detail. So don't worry. This is just like an introduction why you should invest in the stock markets and the fixed income, right? Right, make investment as a best business in the trade. Okay, so what makes you, all of us will think we'll start our own business. Definitely, we are accountants, you all are accountants, financial people, you'll tell yourself we are going to start our business, own business. Why don't the investment be your investment be your business? I mean, make your investment a business. Why? Flexible. Okay, you can only concentrate on 1 or 2 hours in the morning or evening session. Come and see what has happened to my FDs rate, bond rates, or market, and just take decisions. Work anywhere in the world, so you can concentrate on US market or America, India, London market or Indian market. Online, you can do it. Even Sri Lankan market is online. I'll show you in a while. Next one, no employees needed in your own businesses, no renters, okay, no competitors. So your own business, okay, no products or inventory, recession proof, low startup. This is the very important one. When you want to start your own business, and yeah, you're working in an organization as a professional accountant, but if you are thinking to start your own businesses, it's very difficult in real life. So you can start your own capital investment of a business just in a lower way and low risky. Definitely, if you think if I'm going to start business and it's low risky, it's wrong, guys. It, you should have, if you have invested in fixed deposits, actually it's very low risky, and even equity markets, no. Right, let me come to the equity market and just speak about inside of these and give you a small pitch on this also for you all to get a small idea about that. Right, investing in market, is it gambling? Everybody says, is it gambling? Is it gambling? Of course, yes. If you believe of luck and rely on others, of course it's gambling. So it's your own hard-earned money, okay? But you think that I will believe on broker. I believe on the next door person. He's a very good friend of mine. I believe on my boss's advice. No, then it will be a gambling market. Okay. Finally, what happens? Final result is a failure. Blame the market and say it is a gambling place. Okay. So when your colleague tells some advices, you do and you earn money and you will be very happy. After that, when he tells you some advices, you invest further money, and finally what happens? You get failed. And you criticize the market. Market is a gambling place. Yes, of course, it's a gambling place. But what makes professional people winners? Then how professional investors succeed, right, guys? So how professional investors succeed? Understanding the macro environment. Earlier I told you, okay, earlier I told you, when you are in the market, even the interest rates, okay, you must think about what is going to happen in future. Read your newses, understand the market well, and be prepared for the future. Okay, so one thing is, I can come back to my presentation. Understand the macro factor. That means government stability, economic growth, your inflation of the country. So you can take the rules and regulations of the country, GDP growth. Okay. Now you will ask me, sir, where can I find this information? It's simple. You should read your newspapers. No need to go to each website and take your information. In Sri Lanka, obviously, you have the Financial Times newspaper. It's a best newspaper. It has all the information in a summarized manner. It will be really useful. Understand the fundamental analysis. That means I'll take a small slide over here. When you're going to invest in a stock, okay, you must go to the stock market and understand the stocks information. So I'll take a small 2 minutes time. We'll take a Sampath Bank stock. Okay, we'll take a Spence. Okay, Erkan Spence. So Erkan Spence, you can go to the Colombo Stock Exchange website and you can read their financial statements. So go there, read their annual financial statements and get to know about them well. Okay, get to know about them well, about their company, about their right. It's loading. Let me take a time. But sir, I can't have time to read these things. It's very difficult. Then there are a lot of websites in the planet. Okay, don't worry. One of the interesting websites I use to is investing.com. So you can go to there and you can type as space. Okay, so it has a lot of spends in Sri Lanka, in the planet. You can we are going for our Sri Lankan one. So let me see what are the informations we can grab quickly. So we can grab quickly the financial information. So if you go to the website, before you invest, you should know the fundamental. So what is fundamental? I'll tell you. So already fundamental. Yeah. So P, sales, price to sales. So these things, price to book value, these things you know. Okay, financial summary, balance sheet, you have the industry average, and you have all sort of information about this company, right? So you can take your decisions. So on the other hand, always don't forget to read the annual report. Okay, the best investment you must make to read annual report, understand the company, understand the management first. So why we read the annual report? Most of the time to read and understand the management, how they are progressing and what sector they are, how the business works. So those things will be working on you. Right. So I just gave a small insight on that also. Right. So understanding the fundamental. What are the fundamental, you'll ask me? Company analysis, industry analysis, economic conditions, future profit outlook. So these things you can go to their annual reports and read the annual reports. And next thing you can go to their website, investing.com or some other websites, understand what they are doing, how the company has performed. So you all are definitely accountants. Better than me, you will tell the financial analysis. Right, guys? For you all, fundamental. What is fundamental? You may ask me. So I talk last week, my boss, the MD of CEO of my company, we are bankers. So he wanted very interesting. Harshan, let me get the banking sector's analysis. So I hope you will understand these are the sectors of the banking sector in Sri Lanka. Market cap means market capitalization. The index PE is average sector index earnings price to earnings was 8, and price to book value was 0.5. Return on equity is 8.5, and earning yield was 15%. Right. So what I did was I took all the listed companies in Sri Lanka. I just took their PEs and price to earnings and price to book value and the ROE, return on equity, and earning yields, and track what are the businesses. I don't want to tell it's stock social. What are the businesses? Okay, are good in this right time. So I was very surprised. There were three or four banks were good in their financial statement, but I'll come to the next area before you take a chance. There's fundamental. Another thing is there. I'll tell you that also. So I just went through and I was very impressed about the Sanasa Bank, because why Sanasa Bank for fundamental? I'll give you a small idea. See, the sector's PE is 8 times, but the Sanasa Bank had only 3.28, very cheaper. Okay, much more less than the banking sector's PE. Then price to book value, it's sector 0.55. Sanasa had 0.41. So you are, yeah, you are a gambler. Yeah, you are a gambler, but you are taking the best out of best to gambler, right? So Sanasa had the lowest P price to book value in the index. Then I went through the earning yield, right? Sanasa had the best earning yield. Yeah, I agree. NDB Bank has the biggest earnings, but when it comes to the all criteria, it had a 12.63 earnings. So I was very happy about that also. Then earning yield, the industry had 15.5, but Sanasa Bank had 30 earning yield. So it's almost a good cake piece to eat, right? So you may ask me, why don't we invest in other green, nice stocks? Yes, NDB will be a good stock to invest. Right, next one, International Bank will be a perfect stock to invest. That doesn't mean commercial bank is bad, because commercial bank is just above the price to book value in the sector. So it doesn't mean that it's bad. But if you know your fundamental well, you take a good decision, good stock from the market. That means you do a good deal in the market. So you may ask me, now all green sign, NDB Bank, HDFC Bank. Yes, correct. But obviously I found out I was very greedy. Okay, when you're investing in markets, you should be very greedy. Okay, you should take the best out of best. So I took Sanas as my right. Next one, I took NDB Bank as my investment for our company's investments, right? So I just told me what is fundamental. So when you're investing, what are the main 3 things we need? One is understanding the macro environment, then understanding the financial fundamental analysis. So I just showed you what is fundamental analysis. Then technical analysis. Okay, this is a big playground. You should read the charts and understand what is happening. Now, a lot of people will tell, we have invested in Sanasa, but Sanasa has not gone down. Okay, when I was here, it was 55 rupees. I'll show you the proof for you all, guys. Give me a second. When I invested, it was 55 rupees. Okay, so it's not much long time, about 1 week to 2 weeks before, right? So I went and see the technical analysis. What is technical analysis? It's always charts, demands and supplies, trends, and this one. So I'll take a small time with you all. Actually, I'll go to the stock market of Sri Lanka. It's closed now. I'll go to the Sanasa Bank. Okay, I hope you can see my screen. Sanasa. So I think Sanasa will be here. Okay, no problem. I'll type it. Okay, so all the stocks have gone up. I didn't tell anything, but it's now it's 65.50 almost. It's going in 10 rupees up than the trend. So it's at increased 20% rate. So the market was going ups and downs. The technical analyst shows that this is the pace. Okay, you will tell me, sir, this is the bottom place. Actually, this is due to COVID in March. So you won't get that chance again. So the stock has gone up and down in waves. If you know your technical analysis well, you can see always somewhere in 50s, the stock is a good stock to buy because it will move up further, right? At least in 60, because you have a 10 rupees buck, that means you have 20% return on your investment. Believe me, within a 1 month or 2 weeks time, 20%. Sri Lanka fixed deposit rates are, it's almost 4 to 6%. Okay. This is, I am speaking about a week. So if you know your right investment, go to your technique fundamental properly, understand your fundamental properly, then you come to the technical analysis. Now I'll take another stock. Okay, I had done my technical analysis over here. This was a stock very interesting. I come to the game, right? That means Kalni cables. Okay, so it was very fundamentally sound. If you want Kalni cables, you can go and hit your Kalni cables. You'll get the information. That's another story, right? So what happened? It was over here. It struck over here. So I went through the technical. I found out an average price on the market. Always it comes near the average price. The stock runs. See, it runs over here. It runs over. So technical analysis will give you a small insight. If it comes and touches near over here, it runs. So I bought actually 120 first. Okay, it was a Monday on beginning of this year. Actually, the dates will be perfectly correct. Okay, it was 4th January. Okay, so I went through the fundamental. Don't underestimate. First of all, the fundamental economy. So economy was in a boom stage. Now again we are recovering. Then I went and found out this Kalni Cable. It's a cable manufacturing company. I just put a gamble of my company's assets. Suddenly the company share boomed back up. So if you see this one, these lot of technicals are there. Okay, so technical analysis actually it's a C of technicals. Okay, so I will take RSI, small example, but today I'm not going to speak about this in detail. So this relative price index, okay, this shows the demand and supply. See, when there's a demand, it moves up. I came and bought it. Suddenly the stock went up to 190. Okay, then again it came to 170, but I still keep on, but I must think addition to sell it now because it has gone to 190. Now it has came down back, right? So technical analysis. So why am I telling this? What is technical analysis? Just I told you. So next thing. So what are things to decide to invest in a stock or a commodity market or anything? Okay. Number one, I will tell you all, go to your fundamental macro economy. Okay. Go and understand your macro economy. Then come to the fundamental analysis. Read about that, understand about the company or the assets what you invest. I told you your business is your business. Okay, you should don't rely in your putting money to your friend's business. Rely on you and invest in your business. Okay, then technical analysis definitely we can superb investment, right? So some people will get failed or everybody typical thing is everybody says why people fail in stock market. Okay, why? The answer is be disciplined. Okay, what is be disciplined? You may ask me. Avoid gossip, avoid others. Rely on your technical fundamental analysis. Okay, so I don't know technical analysis, but you know your fundamental analysis. You are a financial people with knowledge of price to book value, earnings, discounting, cash flows, like professor told me. So you all are good on this. Take the financial statement, discount their cash flows, and calculate their company's value and invest. Okay, avoid saying others say. Number one, why we get failed is we always ask others gossip and interested. Next one, best yet to come, be patient. So what happens? One stock is going further. Shall I sell my this one and invest this? That is a foolish decision. Okay, always be patient. Like I'll tell you a slide, nice slide. Okay, Warren Buffett said, be patient. Stock market is a place where funds are transferred from impatient people to patient people. That's a superb thing the Warren Buffett told, the famous investor in the planet, has told. Stock market is a place where funds are transferred from impatient people to patient people, right? Right. So next one, accept small losses. Always you are investing in businesses, okay? Always have your stop losses. What is stop losses? You may ask me. When you're buying a stock, keep a small downtrend stop losses. If the stock comes beyond that limit, I'm going to accept the loss. So why people fail is they won't accept the loss. The losses will be further expand. So remember, accept losses. So I don't know, within this 1 hour time, I can't teach these all. Definitely, Mr. Farshad, and if you are interested, just tell me, I'll help you on these areas. Right, investing in fixed income. Right, fixed income. This is a playground where you are in a secured investment. Why secured? Why we are investing? Most of us are investing in fixed income rather than equity or forex markets or commodity markets. One is secured capital. Your capital won't be corrupted. Okay, nobody will take your capital. It's a secured investment. You are in a guaranteed environment. Okay, so your capital will be secured, not like unless like stock markets it can erode your capital. So be careful on the stock markets. Okay, but fixed income, so you can make your own capital investment and take a compounding interest income. So don't underestimate the compounding interest income. Then it's a guaranteed return. So if they tell it's 8% or 2% or 4%, definitely they are going to give you, not like stock markets. Right, we'll come to our Sri Lankan context. Available options available in Sri Lanka. Okay, so what are the options? Normally we go for fixed income. Okay, most of you all, I know you will go and invest in banks, but we have other investments in our country. Number one is the perfect one is the debentures. Listed debentures in stock market, companies have listed debentures. You can take those debentures from the stock market, but don't worry, it's capital secured and guaranteed return. It's not stock markets just share it will collapse. It will give you a guaranteed return debentures. Okay, so you may ask me why debentures rather than a fixed income. Debentures are much more higher return for us. Money market. So some people have a question, we have money but short term, I want to put on Friday night and take it on Monday to my business. Okay, oh, I have some money, I within overnight I should invest. I have some money for 1 week. So bankers won't accept this money for unless it's at least 1 month. But money market is a playground where you can go to your security firms, okay, and invest even a day, a night, and next day morning you can take your money. They will give you the interest. So these are the options in Sri Lanka we have, where fixed income, bonds, money markets. So these options we have. So for example, when I invest in stock market, if I get money on Friday, okay, so Friday, Saturday, Sunday will be a holiday. So what I do is on Friday night, I will just put it into the money market, all my company's money, okay, funds in the equity market. So it will be staying parked at Friday, Saturday, Sunday. Monday morning, I'll take it back with the interest from the money market. So this is where the capital will come, right? I could see the bigger picture. Okay, compounding interest, don't underestimate. Okay, so don't underestimate your compounding interest. Even your gratuity, your EPF, ETF, after about 15 years, 20 years, when you're leaving, they give you all millions of money. Okay, because interest on interest, interest on interest. So fixed income also is a best source of income, where initially it will show a small growth, but when the time rises, it also rises. Okay, I can remember that slide I deleted. I can remember a story where, okay, where there was a king was interested of a person's work. Okay, and he asked, what do you want in life? Okay, what do you want in life? Okay, so the person asked, dear king, I want 1 gram of 1 gram of we can take 1 gram of rice in to keep it on a what we called it, keep it on a chessboard, and next one it should be 2 grams, next one it should be 4 grams, next one it should be 8 grams. That means chessboard, it has lot of boxes, and the end of the chess box, it should be always double come out. Okay, the king was very thinking as this fellow is a foolish fellow. Okay, 1 gram of rice, keep it on a chess board and always double the amount in the chess board. Okay, then he was laughing at this person and to command their people to give him the rice what he requested. After that, the guards came and told next day, even it is not in our country the amount he asked, because that much of compounding interest has created in his capital. So don't underestimate the fixed income also. Fixed income initially it will be lower, but it will be keep on going up, right? Finally, I don't want to take you much of your time. This is going to be continued. Okay, so if Farshad and you all are interested on my presentation and to know about the capital market much more, actually we can have a 1 day workshop on the macroeconomy. Okay, another day I can have a fundamental, because I can't have within 1 day or 2 day, within 1 hour, all three. Okay, these are larger pictures. Okay, so macro environment, how we analyze a company. Okay, then the fundamental analysis. Okay, I don't want to teach you all, you are better than me. Okay, you know the earnings per share, multiples, P earnings, discounting cash flows. So superb, you all will be okay on this area. But my interesting area is the technical analysis. Okay, very greedy I'm on this area, because after I pick a stock, I'll go and see my technical analysis, where I will find out this is the best place to invest my money. I'll park my money and take my profits up. So don't think always I win the game, always I will lose the game, where my stop losses are playing in my game. Okay, so technical analysis, I don't know much about this. Just tell me, I'll help you all if you are interested only. Okay, right. My last slide will tell everything. Okay, so what do you want in investing in stock market? Actually, in capital market, actually not money, your experience, your training, your ability, your growth, advanced training, knowledge improvement, earnings, and your competence. Okay, so this is the place where you are not making money only. Remember, you learn lot of things how it comes. Okay, so example, I told you how the market reacted from the COVID to the US attack from the Iran, how it has impact. So you will be always keep on touch on the LIBOR rates. You will be keep on learning. Okay, so I always think learning is better than earning, because Warren Buffett says, if you don't find a way to make money while you sleep, you will work until you die. So believe me, if you invest, you don't want to work until you die. So Warren Buffett is one of the famous investors in USA, who has billions of money in US stock markets. He has given a lot of donations to the charity organization. So if I hope you know him, or just go through the Google and let him know about him. Okay, Farshad, any questions or anything, just please be free to ask from me.
Thank you. Thank you, Mr. Harshan.
Thank you. You're welcome.
It was a really interesting topic, and it was very useful for us how to invest in this stock market. And as we discussed already, this is a broad area which cannot be explained in just 1 hour. And you suggested me to divide this area into small element, and so that we can have a consistent workshops on every month or something. I myself and Mr. Jonathan, we will be working on it. We will be inform you about how we can consistently do this program, Mr. Harshan.
Yeah, Mr. Arshan, thank you. I'd echo Farsath's sentiments. You know, again, a very different topic to the first presentation, but for me, that's what makes these webinars fascinating and interesting. So a lot covered there, and I can appreciate and understand your suggestion, your view that you know, maybe some of the areas that you covered are broken down into other sessions. Yeah, maybe, you know, the three of us can speak after this in the coming.
You're always welcome.
You know, to look at ways that we bring this sort of information and knowledge to the
Correct.
members locally in Sri Lanka.
Yes.
You know, it'd be interesting to know what you know, today's participants think, though. You know, if they've got questions as to anything that you've spoken about in your presentation, anything that they're thinking about from a personal investment perspective, as well, would you know, would further insight into these sorts of areas on a monthly basis be valuable, be requested, be demanded. So again, you know, please as I'm talking, do use the Q&A box. You know, your insight, your thoughts, whether you're a member or a non-member, is invaluable for us. It helps us form what will be an ongoing CPD webinar program throughout 2021. But Arshan, thank you very much indeed for that.
You're always
very,
welcome.
yeah, from my side, you know, conscious of time, and I know there are 3 questions that have been asked, so I'll take those one by one in a minute. I just wanted to say a few things on top of what I said at the beginning. So can I first ask that, you know, if members attending today have comments, have feedback, they want to recommend or refer a colleague, an acquaintance to the Institute, please make contact with Farsath. You know, he can answer, he can deal with any of the in-country queries that you have. If it's anything broader, then please do copy Farsath in, but please do make contact with myself. You know, I very much engage with members globally on a day-by-day basis, so I'm always happy to help answer questions and make sure that members have the knowledge and the questions and the answers that they're looking for. So please do bear that in mind. Can I also suggest that members and non-members take a look at the Institute's website, www.ifa.org.uk, and specifically /CPD. There are a number of webinars coming up that are being held in other countries that actually you might find useful and beneficial. There are webinars being held in the UK that I know that we have international members attending. Please look at those, register following the instructions, but there's a good deal of CPD there. As I said, as Farsath has said, we will be building an online CPD webinar offering throughout 2021. I think we've got to be realistic at the moment. The COVID situation, the pandemic, affects everybody globally. I appreciate in Sri Lanka you've had your lockdowns, and maybe in certain areas, regions, you continue to be locked down. The UK is the same, many other countries are the same. So at present, our CPD program is through online delivery, but Farsath is absolutely right. At some point, when it's able, when it's safe, we will look to return to a mixture of online and face-to-face events as well. Another request from myself is members who are listening, who've attended today and who've not renewed their membership for 2021, can you please do so? The Institute has been contacting you and communicating with you since October last year and will continue to do so. Renewing your membership is made up of completing 2 parts. One is making payment for your annual membership fee. And secondly, you must also complete a member return, a member declaration. Paying the fee is not enough. Paying the fee and completing the member return is what's important. So please, if you have any queries, if you have any questions, Farsath or myself or the IFA head office membership team are there to help and support. We are putting together, it's just been finalised, a very short webinar. It's no more than 10, 12 minutes long, I understand, that actually visually takes people through how you access the website, your personal member dashboard, how you make payment, and how you complete the member return. That will be being sent to everybody through email in the week ahead. So please do renew, and please do keep in touch with us. Let me deal with any of the questions that are coming through. The first one is it's a question that is often asked. It's about the Institute. Is the Institute planning to attain chartered status? The answer to that is the Institute have been and are looking into obtaining chartered status. We are at what we would call an exploratory stage of doing that. There is a lot of information, there is a lot of work that needs undertaking before you make such an application. You need a unique business case, and you only get one opportunity to make such an application. So the answer to the gentleman's question is, yes, it's being looked at, but it is not a short-term answer, and it is not something that you can change or alter over a month. It's a medium to long-term project plan that we are looking at. The second question, I believe asked by the same gentleman, is the IFA education program. That has recently been enhanced, and the Institute's delivery partner has changed to an organisation by the name of ATHE. They are an internationally recognised training and education provider. They not only have centres in the UK, but they have centres globally. The Institute's education programme is made up of units from 3 levels: level 4, level 5, level 7. Level 4 is the equivalent to the first year of a bachelor's degree program, undergraduate degree program. Level 5 equivalent to the second year. Level 7 is equivalent to a master's program. So the units are of a degree standard, and at the latter stage above an undergraduate program. Information about the Institute's education program, which is called IFA Direct, is found on the website. And yes, through the credit values, the structure of the education program, it is clear, and we do include information that shows that it's at a degree and above a degree level. So I hope that answers that question. What are the steps that the Institute is taking to promote itself in Sri Lanka? I think at the moment, during these pandemic times, it's probably slightly restricted than what we would normally do. We are very much looking to engage with members and non-members through a CPD webinar series, so the regularity of such a series. We have also looked at other countries at putting on bi-monthly, what we call branch meetings that are less formal, but they allow members and non-members to come together through a Zoom meeting facility, to network, to engage, and to talk and meet each other. We will develop those meetings and webinars as 2021 progresses. We are also engaging with a number of further and higher education establishments in country to develop links that we believe are appropriate, and where historically we've had success in attracting accounting students and accountants to membership of the Institute. Through Farsath and his work, we will continue to look to promote the Institute through other means and methods as well. From a social media standing, we've provided Farsath and all of our other international representatives with marketing collateral to be able to promote the Institute in country far more than we've ever done before, and we will continue to build that social media presence and activity. Things like advertising, whether it be in national newspapers or beyond that, that might be something for the medium to longer term, if I'm being honest. It's not something we're looking at the moment, but I think through a number of other channels and mechanisms, we will continue to promote and raise the profile of the Institute locally. Another initiative that we are finalising from a head office perspective is developing an Institute accredited employer programme, whereby an employer is recognised by the Institute, the staff are appropriate, and where applicable within that organisation can and are encouraged to take part and study the IFA education programme. So I hope I answer that one with some detail as well. There are initiatives, we will continue to build those initiatives. Jonathan Arnold has obviously asked a question, and then I think he's found the information on the website. So Jonathan, I'm glad you've managed to find the information. As I say, please do visit the Institute website. The other platform that I would strongly advise members and non-members to visit is the Institute's digital platform. That is the digital version of our print magazine. So the website address of the digital platform is www.financialaccountant.co.uk. A lot of content, a lot of articles are added to that across a range of subjects, having both a UK and international focus and feel to it. So, you know, 2 actions, please, well, maybe 3 actions from this website. One, if you're a member and you haven't renewed your membership, please do so. Secondly, visit the Institute website, familiarise yourself with it, and especially look at the CPD options. Thirdly, visit the Institute digital platform, take a look at it. Any feedback, please do let Farsath and I know. I think, Farsath, I've covered the questions that have been raised. The gentleman who raised 3 of them, I hope I've answered those to your satisfaction. If not, please let me know now. Otherwise, please get in touch with me. Happy to take any further thoughts and questions offline. Look, from my side, I know we're sort of drawing to a close time-wise this afternoon, coming on to sort of early evening your time in Sri Lanka. I think the professor has left us, but from my side, can I thank the professor and again, Harshan for his talk or their talks today, really insightful, really useful. Farsath, can I thank you for your time? Can I also just say to everybody, please keep safe, your families, your colleagues, and your friends. It's a time for us all to look after each other. It's a time for us to come together as communities in country, but I also think it's a time for us to support each other, you know, across the globe. So please stay safe, please look after yourselves. We will communicate with you with reference to future events. Please take part, please get involved. Farsath, do you have any closing remarks or words?
Thank you, Mr. Jonathan, for clarifying these queries from one of our members. And above all, today's the CPD program was very useful. The first session was by our professor, and the second session was Mr. Harshan. So we are really very happy about the presentation made by both of our speakers, and also we have planned to have some of the CPD program online until the situations of this country has back to normal. So very soon we will be hosting our second CPD program, probably in a month or two. So we will be scheduling and we will be informing you the dates and the speakers informations. So thank you so much, all the participants who were able to join for today's CPD program. And I take this opportunity once again to thank all the participants and all the speakers who are managing their time to attend today.
Thank you all, and have a good evening, and we look forward to seeing you soon. Thank you all very much.
Thank you.